Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings, or as I like to call them, financial soap operas. Today we're cracking open International Tower Hill Mine's latest annual report. Will this be a gold rush or another fool's errand? Let's find out. This company is holding a development stage gold project in Alaska. The report is a mixed bag, it shows potential, but they still need funding and gold prices have to cooperate. It's a classic resource company situation. International Tower Hill Mines is focused on the Live and Good Gold project in Alaska. They haven't started mining yet, but they're working to get there. Think of them as a prospector with a promising claim. Now comes the hard part, turning that claim into a working mine. As of the end of last year, the project holds about 9 million ounces of gold in reserves. That sounds like a lot, but remember, it's still in the ground and it costs money to get it out. They're planning to do community work and environmental studies. That's important because getting permits for mines is tough and involves working with local communities and making sure you are not harming the environment. Recently, they managed to raise nearly $4 million through a private placement, which means they sold shares directly to some big investors. That cash will help them keep the lights on, but it's a small amount compared to what's needed to build a mine. They are also looking for a partner to help fund the project. Think of it like needing a rich uncle to help you start your business. Now for something completely different, let's talk about cybersecurity. Since even gold miners have to worry about hackers these days, the company says they have processes to deal with cyber threats, which are overseen by the board. It's like having a security system for your digital gold. They haven't had any major issues so far, but it's an ongoing concern. One successful attack and it can take down the entire operation. The company controls a big chunk of land, almost 20,000 hectares, through ownership, leases, and agreements. Interestingly, a lot of the claims are unpatented, which basically means the company has the right to mine, but not own the land outright. It's like renting a place to live versus owning it. To keep those claims, they have to pay annual rental fees and do a certain amount of work on the land. There are also federal and state royalties if they ever start producing gold. The type of gold mineralization they're dealing with is similar to other deposits in the area, intrusion related, and often comes with arsenic and antimony. The company collects samples and analyzes them rigorously with quality checks and balances to make sure the results are accurate. It's like double checking your lottery ticket numbers. The company will need to consider reclamation costs or the expense of fixing the area when they finish mining. This is important to minimize effects on the environment. There are no known environmental issues that could stop them from mining, but the environmental studies need to happen before they can start extracting. Now, the big enchilada, the technical report summary. This is their best estimate of how the project could work. The project could produce 6.4 million ounces of gold over 21 years from a gold reserve estimated at 9 million ounces at 0.65 Gerton. The price tag, a hefty $1.93 billion. That's a lot of digging. They also estimate all-in sustaining costs at $1,170 cost that much to produce each ounce of gold. At a gold price of Datanate present value of $400 million per ounce, the project has a net present value of $400 million. That means it would be profitable, but not hugely so, after taking into account all the costs and the time value of money. The report also lists their mineral resources, which are less certain than reserves. They estimate over 4 million ounces of gold in the measured and indicated categories, exclusive of the proven and probable reserves. The market value of the company's stock held by non-affiliates is about $66 million. That gives you an idea of the scale of the company. They are involved in some legal proceedings, but management doesn't think anything major will come of it. Here is a quick fact sheet on gold. In 2024, the price ranged from about $2,000 to $2,700 price per ounce, averaging nearly $2,400. As of March, it is nearly $3,000. Keep in mind the project economic numbers are based on an average price of 1,000, while based on an average price of 1,000 be going through. Okay, time for the financial statements. This is where we see how the company is actually doing. 2020, Fransens one Severnio F Sevio Chu 6 Sexy U1 T of Stain Cassendio 20C. Subsibets and subsets of do with EKD EU 3N Kilka Skaj 1687 690 Pew QPCs 9 BK at the end of last year. Cassagia som BU 6 op 7 T Mem Sukevitex Naim Fraxi, Se Apshuel 7D. Y Tam to Offshu Apsasins Res Evan 23 Fix, 8 Upshu Oyasi, Cheriam Shu Acti Medadiev CS. Neither of 3 are Atechi A ein DG Wyvents at carry cash and cash equivalents at carrying value scale. Thereof Shu are cash and cash equivalents at carrying value scale 0 unit ref fee KAT up 4Y4 ETG A senders O Uri Amsar de Ash. Cash for 7 IGRB. For last year, they lost about $3.6 million. Remember, they are not producing anything yet, so losses are to be expected. A big chunk of their expenses is share-based payments, meaning they here compensating people with company stock. This is a non-cash item and common for early-stage companies. Cybersecurity was mentioned as a threat, as we just discussed, but the business doesn't believe it to be material right now. Their total shareholders' equity is around $56 million. This represents the net assets of the business, which is the asset value minus its liabilities. This coming year, they're planning to spend around $3.7 million, so clearly they will need to raise more funds to survive. The company has a risk about net operating losses in the US because they have a history of losses, and there may be a limit to how much they can use this to offset in the future. So let's put all of this together. International Tower Hill Mines has a potentially valuable gold project in Alaska, but it's still in the early stages. They need a lot more money to build a mine and would benefit from a rise in gold prices or a strategic partnership to de-risk the investment. Their lack of revenue and ongoing losses mean they need to keep raising funds, which can dilute existing shareholders. There are several risks and a lot of ifs. But there are opportunities too. Gold prices are currently trading near all-time highs, and if they manage to get the project off the ground, it could be very profitable. What do I think? It's a high-risk, high-reward situation. This is a company that is highly leveraged to the price of gold and the success of their mine. I suggest keeping a close eye on gold prices and permitting progress as the key indicators for the company's potential to get to production. Thanks for watching. If you found this breakdown helpful, be sure to like, comment, and subscribe for more corporate deep dives.